There's a quiet shift happening across the United States right now. It's not loud, it's not dramatic. You won't always see it trending on social media. But in homes from California to Texas, from Florida to Ohio, Americans are asking a very serious question about their money. When uncertainty rises and markets feel unpredictable, what should you actually be buying? Silver coins or stocks? You're watching Signal Scope Market, and today we're breaking down what smart Americans are really doing with their money. For decades, stocks have been the backbone of wealth creation in the United States. If you look at the long-term history of the American stock market, it has rewarded patience. From industrial expansion in the 20th century to the tech boom and digital revolution, companies have created enormous value. When you buy stocks, you're buying ownership in businesses that innovate, hire employees, generate profits, and grow over time. That growth can translate into higher share prices and dividends. Many retirement accounts across America are heavily invested in equities. Millions of workers contribute to 401k plans every month. Pension funds, mutual funds, index funds, they all rely on the idea that over long periods, American companies continue to expand and create wealth. Historically, that belief has paid off. But stocks come with volatility. They rise and they fall. We've seen sharp corrections during economic downturns, financial crises, and unexpected global events. Markets can drop fast, sometimes wiping out years of gains in a matter of months. Even though recoveries often follow, the emotional pressure during those downturns is very real. That's where silver coins enter the conversation. Silver is tangible, it's physical. You can hold it in your hand. It has been used as money and a store of value for thousands of years. In the United States, investors can buy physical silver coins minted by the government or produced by private refiners. Unlike stocks, silver doesn't represent ownership in a company. It doesn't depend on quarterly earnings reports. It doesn't go bankrupt. For many Americans, that physical ownership brings psychological comfort. During times of economic stress or rising inflation, precious metals often attract attention. When people worry about the purchasing power of the dollar, they tend to look for assets that are not directly tied to the financial system. Inflation has been a major topic in recent years. Higher grocery bills, increased rent, rising insurance premiums. Everyday Americans feel the impact. When inflation rises, cash loses purchasing power. Stocks can sometimes outpace inflation over the long run, but in the short term, high inflation and rising interest rates can pressure corporate profits and stock valuations. Silver, on the other hand, has historically been viewed as a hedge. It doesn't always move perfectly with inflation, but during periods of monetary uncertainty, demand for physical metals can increase. Investors seeking protection often allocate a portion of their portfolio to precious metals as a form of insurance. But here's the important part. Silver doesn't generate income. It doesn't produce dividends. It doesn't expand operations or launch new products. Its value depends entirely on supply, demand, and market perception. If demand increases, prices can rise. If demand weakens, prices can fall. Stocks represent productivity. When you own shares in American companies, you're participating in innovation and economic growth. Businesses reinvest profits, expand into new markets, develop new technologies, and improve efficiency. Over time, that growth can compound. Smart Americans understand that difference. Another factor to consider is liquidity. Stocks can be bought and sold instantly during market hours with minimal friction. Brokerage platforms allow transactions within seconds. Physical silver requires more effort. You may need to visit a dealer, pay premiums above the spot price, and accept a spread when selling. Storage also becomes a factor. Keeping silver safe requires planning, whether through home safes or secure storage facilities. However, physical ownership removes counterparty risk. When you own silver coins outright, there's no intermediary between you and your asset. Stocks are held electronically in brokerage accounts, which depend on financial institutions and digital systems. While the U.S. financial system is strong, some investors prefer diversification outside of it.
Industrial demand also plays a role in silver's story. Silver is widely used in electronics, solar panels, electric vehicles, and medical equipment. As the United States pushes forward in renewable energy and advanced manufacturing, industrial consumption of silver may influence long-term demand. That gives silver a unique position compared to gold. It's not only a store of value, but also a critical industrial metal. At the same time, stock investors can gain exposure to those same industries by owning shares of companies involved in technology, renewable energy, and manufacturing. That introduces potential growth opportunities, but also corporate-specific risks. So, what are smart Americans actually buying? The truth is, many are doing both. Diversification has become a central theme. Instead of choosing one side, investors are blending growth and protection. They may keep the majority of their retirement funds in diversified stock portfolios while allocating a smaller percentage to physical silver as a hedge against uncertainty. Generational perspectives also influence decisions. Older Americans who experienced high inflation in the 1970s or market crashes in 2000 and 2008 may have stronger trust in tangible assets. Younger investors who grew up during long bull markets often lean more heavily into equities, believing in long-term growth and innovation. Risk tolerance matters. A young professional with decades before retirement can withstand stock market volatility more easily than someone approaching retirement. On the other hand, retirees often prioritize capital preservation and stability. Tax considerations differ too. Stocks held long-term may benefit from favorable capital gains treatment. Silver can be taxed differently under U.S. regulations. Smart investors factor in after-tax returns, not just headline performance. What separates emotional investors from strategic ones is discipline. Emotional decisions often happen during market extremes. When stocks are soaring, people feel invincible. When markets crash, fear takes over. Smart Americans tend to step back and think long-term. They ask what role each asset plays in their broader financial strategy. Stocks historically excel at building wealth over time. Silver often performs well during periods of instability or currency concern. Each asset serves a purpose. The real question isn't which one is better in isolation. It's how they function together in a portfolio designed for resilience. In today's environment of shifting interest rates, national debt discussions, geopolitical tensions, and rapid technological change, adaptability is key. Investors who remain flexible, diversified, and informed are better positioned to navigate uncertainty. Silver coins offer tangibility and independence from the financial system. Stocks offer growth, dividends, and participation in American innovation. One protects, one produces. Both carry risks. Smart Americans are not chasing hype. They're thinking in decades, not weeks. They are balancing opportunity with protection. They are building portfolios that can handle multiple economic scenarios. If you found this analysis valuable and you want deeper insights into where capital is flowing in the United States, make sure you subscribe to Signal Scope Market. Like this video, share it with someone who's debating between silver and stocks, and turn on notifications so you never miss our breakdown of the trends shaping America's financial future.